Welcome back to this weekly dose of market drama. The biggest headline this week was the October CPI numbers, which came in much better than expected. So I'll start with the headline inflation number, which includes energy and food prices, came in at 7.7% year over year. Prior month was at 8.2, right? So you're starting to see that headline number come down, but more importantly, it came down more than expected. The expected number was 7.9. But then that's the headline number. When we look at the core inflation number, this is kind of like the serious number, right? Stickier. It excludes energy and food prices. We saw 6.3% year over year growth for core, which was better than the 6.5% that the market expected. Now, even if we go we double click one level deeper, we see some encouraging signs. For instance, US vehicle prices dropped 2.4%. Medical care services were down 0.6%. Specifically for medical care services, this is a very sticky part of the composite. And when it starts to move in one particular direction, it does tend to continue to move in that direction. So this is very encouraging for future CPI numbers. When you start to see medical care services, when you start to see US vehicle prices start to show negative numbers, that's obviously what you want to see. Very different, for instance, than the July CPI number, where the headline number was better than expected, but the core CPI number still showed very sticky components moving up rather than down, right? So this is why the market loved it. Let's talk a little bit about how much the market loved it. So the Dow is up, and this is recorded as a Friday morning. The Dow is up 4% on a weekly basis. The S&P up almost 5%. NASDAQ up almost 6%. But most of those gains happened on Thursday. For instance, the S&P was up 5.5% on one day, right? And just to give you a sense of what does that mean? How big of a move that is? There's only been 23 trading days since 1950, where we saw a 5% up move out of more than 17,000 trading days, right? So this is a huge move by the S&P 500. NASDAQ was up even more. It was up 6%. And what I thought was interesting is it wasn't just stocks, right? If we look at bond yields, they fell pretty hard, which means bond prices went up. I see the bond market as investors that tend to be a little bit more grounded, right? Stock market investors tend to get a little excited and depressed very quickly, but bond investors tend to be a little bit more grounded. So this move by the markets was supported all around, right? In essence, this inflation number was what the market really was hoping for. Now, why is this a big deal looking forward? We talked about this a lot, right? The Federal Reserve is trying to hike interest rates to squash inflation. They keep telling us that's what we care about. But when you get a better than expected inflation number, the market is pricing the Fed's not going to have to hike as much interest rates, which means that the economy is not going to get hit as hard, and stock valuations are not going to get hit as hard. So just to give you a data point around that, there's a futures market where they try to price what the Fed is going to hike in the coming meetings. The probability of a 50 basis point hike went from 60% to 80%. If you look at that same stat just a month ago, it was 60. 6 months ago, it was 30%, right? So there's now a higher probability. The market's saying, hey, there's a higher probability that the Fed will only have to hike 50 basis points in December versus the 75 basis points that was kind of the base case. So we will see, right, as we get new data on the inflation side as well as on the economic side. Clearly, the market really liked it. The other big item this week that became kind of more of a sideshow from the market's perspective was the midterm elections. And the results are still inconclusive, but it looks to be more of a gridlock scenario rather than kind of a big, huge win for Republicans in Congress and in Senate. Historically, gridlock in Washington tends to be good for stocks. It is what it is. That's just kind of what the data has told us in the past. What to look forward next week? We get PPI numbers, which is producer price index numbers on Tuesday. That gives us another inflation reading for October, but from the seller's perspective rather than the consumption perspective. And we also get housing starts on Thursday, existing home sales on Friday, which gives us another reading on the all-important housing market, one of the areas that we're very keeping a close eye, considering it's such a bellwether for the overall economy. So we'll leave it there. Thanks so much for watching. See you next week.